Want to get some reaction to Twitter's results. Joining us is John Freeman. He's the analyst at CFRA. You're hearing these numbers across. You're looking at the stock already down this morning. Does that make sense to you? Where do you think it should be?
Yeah, no, that makes total sense to me. So this is kind of the reason why we've had a hold on the stock. I mean, management's done a really good job over the last couple of years of making, of sort of making performance a little more consistent. But then they have a quarter like this, and they've got a lot. They've made a lot of improvements to the tools, to the to make it easier to target for advertisers. But then they have a quarter where, and they're blaming product and seasonality. I mean, come on, that's, seasonality happens, every, season. So, that always kind of gives me real pause. There might be some value here at this point if there's an overreaction, but it doesn't really surprise me that they missed expectations. But it did surprise me that they missed EPS by so much, given, the operational leverage that they should have in this business.
What do you think the fair value is for this company right now?
Well, my target was 40, but maybe a little less than that now. I just don't. I want to see. I come at this from a fundamental perspective, and I want to see some improvement in the fundamentals and consistency, because that gives you confidence that the operational execution is there. From management's perspective. I mean, it's a social media business. It's got network effects. It's got all kinds of things that should really be able to drive both the top and bottom lines consistently.
One thing I think that's worth noting here is that over the past several quarters, we've seen the street come around to the idea that this is not going to be a huge business in terms of the number of users. It's never going to be as big as a Facebook. It may never even be as big as Snap. But if you focus on these daily active users, they have this dedicated user base. And Twitter's done a good job at making more money from those users. What we're seeing this quarter is they're actually growing their user base better than expected, both in the U.S. and internationally. The challenge, though, is if they have these hiccups with the product and they're not able to adequately monetize those users, then everything that the last couple of quarters of growth has been based on starts to come into question.
Yeah, I would also add that there's a lot of. Twitter has become increasingly more of a broadcast one-to-many sort of medium, and that doesn't capture the kind of targeting and that doesn't gather the kind of data that advertisers that are as rich as even, for example, Snap, which obviously has its own operational issues. But I think that's really been a handicap for the company, over the past few years.
How do they change that? Is there anything they can do about that?
I'm not sure. I really don't. That's a very good question. I've thought about this. I don't think there's a good answer to that, although, maybe you just own what you are and you're more of a broadcast medium and you monetize and optimize for that.
And you don't think they're optimized for that now?
Well, obviously they're not as optimized as they should be, right? I mean, like I said, there should be a lot of operational leverage in this business, and you see it for a couple of quarters, and then they take a huge step back, like they have this time. So that's even like I said, it's attractive perhaps as a value stock if there is an overreaction, but I don't know. As a fundamental investor, I would step to the side, and we've been to the side for a while.
Look, John, how much of this is privacy, though? If Facebook is in trouble for data mining or for privacy potential breaches, if Twitter's trying not to do that, the answer is you may be unable to sell as much advertising, right?
Right, and in fact, I mean, there's a possibility that Twitter benefits from some sort of very intrusive Facebook regulation, but in the meantime, advertisers care about the return on investment for their advertising, and obviously the improvements in the tools were certainly not as consistent, and obviously they mentioned, I don't know, I have the details, but obviously they mentioned product related issues that hits their customer base, and I don't know, I just don't think that I need consistency from their fundamentals in order for me to be more positive on the stock.
And I would say even though Twitter doesn't have as much of the personal data as Facebook does, and it doesn't have the same questions about encrypted messaging, Twitter does have questions and potential regulation about the kind of content it's allowing people to broadcast on its platform. And if it is a one-to-many broadcasting tool, should it be regulated and held to the same standards as broadcasters, such as the TV networks? And what does that mean from a regulatory standpoint?
That's a great point, and that is something that people on Capitol Hill, the guys behind me here, they will pick up on that. And even though Twitter doesn't appear to need regulation, they may very well fall into that category as well and kind of get sucked into the same vortex as Facebook. Even though the sort of the antitrust argument on Twitter doesn't really hold as much nearly as much water.